Tere. It's okay.
Morning, Professor.
Good morning. How are you? All right, let's start a few housekeeping items before before we go back into chapter 17. I just want to remind you that you have this homework. As you can see, Wiley's back up. It was back up late on Monday. They they fixed whatever the issue was. So just to remind you that what is going on here? Sorry, 1 second. I have to check. I feel like maybe let me just go back to the instructor view. Like maybe something was wrong with the due date on the homework there for a second. Just bear with me. Okay, I'm getting confused. So remember there was supposed to be homework due today, but because there was all this stuff that was going on with Wiley on Monday, I said I would postpone it. So it's postponed until Friday evening. So that will be the last cutoff on the 15th of May, Friday evening. And for chapter 17, the homework will be due on the evening of Labor Day. So, just continue to pace yourselves. The next quiz and test, I know I said this before, but I'll say it again. It's going to open on the 24th and be closed on the 31st of May. I'll put up the prep sheet as soon as possible so that we can go over it so you know what to expect. We'll go over it on Monday, which is the 18th, which is about a week before the test opens. The other thing I wanted to say, I'm not sure if any of you are supposed to be, I think there was at least one person who asked me about graduation. Um, And no, there still isn't obviously a physical graduation happening. But what I did just want to highlight for you was that if you are supposed to be graduating the semester on the same day that the commencement would have been, which was June the 16th, at 1 p.m., and maybe you received this information already. This is something I received from the president. They're inviting all the graduates, their families and friends to tune into, a virtual celebration on the LaGuardia website and social media pages. And basically, there'll be a taped message from the provost and from the class representative for this um, academic year, and also from the president. And you are invited, if you are so moved, if you want to, you can also next year, which is a very long way away, but next year, if you still want to walk in a graduation, you are invited to walk in the June 2021 graduation. I know that in this class some time back, somebody asked me about graduation, and I said that they would likely postpone. I wasn't sure if they're going to try and do it later in this year, but it seems that they're just going to double up next year for whoever wants to still walk next year, even though you've already received your diploma this year. Another order of business for people who are graduating. If you are graduating this semester, you should have had, you should have had this thing, which is intent to graduate as one of your classes on your schedule. It's not necessarily it's not a class, but it's basically giving the registrar notice that you think that you've completed or you're about to complete all the requirements for graduation. So if you are expecting to be done this semester, and for whatever reason you do not have intent to graduate as something listed on your degree audit, you need to contact me urgently, because our admin folks are saying that they're seeing some students who never registered for this thing, and they are hoping to graduate this semester or to be done with school this semester, but the registrar won't let you through until they've actually looked at all your classes and stuff, and they won't know to do that without this course. So if you don't have that course on your list, and you're supposed to be done with your 60 credits either in spring 1 or spring 2, contact me immediately. Like, you can stay on at the end of this call, or you can send me an email. It's critical that you are registered for this, and there is still time for the registrar to basically register you for this. But if you leave it, you'll have to hear the sad account at the end of the semester that they can't give you a diploma because they haven't looked at everything they're supposed to look at. And this is especially important if you're planning to transfer and the transfer school is expecting to see your diploma. If you have or expect, to graduate in the fall, then you need to register for this intent to graduate as part of the registration that you're doing now for the fall. Unfortunately, I still don't have, and I mean, this is even in the provost letter, we still don't know how we will operate in the fall, whether it will be completely distance learning or whether there will be some combination of in-person and online. We don't know. They're still waiting to hear what it's the board of trustees and other people at CUNY decide, because remember, CUNY is a massive system with about 250,000 students, and there's multiple colleges. So it's not just LaGuardia that has to make that decision. We actually have to, they actually have to make the decision for CUNY as a whole. So for now, you're likely seeing, and you should be trying to register for classes if you have to continue with your studies, you're likely seeing classes that are actually listed with days and times, meeting times and so on. Just remember that it's possible that those classes, even though they have meeting times that make them look like they may meet in person, if they decide to keep the CUNY system in distance learning mode for the fall, then all those classes will be online, and they may or may not meet on the day. So like I chose to keep my classes meeting when we went to distance learning, but other professors may not require a weekly meeting or whatever. They may do it a different way. So unfortunately, everything is still evolving, so we don't know. But don't let it completely stop you from registering for classes, because remember, you can always register, and then if you really don't want to take a class or whatever, you can always swap it for another class, or you can drop it before the payment comes due. But the worst will be if you wait to register and then you find that the classes that you want are all full, especially if you're coming near the end of your time at LaGuardia. So don't try not to postpone registration too much, because again, they are already talking budget cuts and things throughout uni, and if class sections don't fill up, then they may cut sections of certain courses, which means that if you come on the scene late, you may find that there just isn't a space because there's all kinds of things happening in the background. Sorry that sorry, this is not what I wanted to do. I'm just checking if anybody's looking for me, but no. Okay. Sorry that I'm not giving more information than that, but I don't have more information. Does anybody have questions for me about any of the stuff, the commencement online, the classes, registration, anything like that?
When do you usually get your diploma if you're going to graduate in spring two?
Oh, do you mean the physical document, the physical diploma?
Yes.
It's very soon after graduation. Like, we're talking that it's probably prepared. A few weeks or a week or two later, because that whole intent to graduate thing. Remember this thing that I'm talking about is the whole point of why it would be a quick turnaround, because they would have already looked at your stuff and been able to see that you qualify basically to graduate, and then they prepare it. Now I have to give a caveat that in this day and age of COVID, a physical diploma, I can't say at this time how that whole thing will play out, because no one is on the campus. We're actually banned from going to our offices or anything like that. So I don't see how distributing a physical diploma would be feasible at this time. So I can ask if they
No,
plan
you
to mail
plan
people.
the
Huh?
also want to pick it up, or how does that work?
But the college is completely shut down. Like normally you would pick it up, but the college is completely shut down. So no one is going to be there printing out stuff at this time. And I don't know, I didn't ask that question because most students can still use their unofficial transcript to apply for schools and stuff, and then the diploma is like a formality. So I didn't ask, how that piece will work, but I can ask my boss. If you absolutely need to have a diploma to prove something, whether it be at a transfer school or something else, you should just email the registrar, which it's on the landing page. Yeah, if you look at student resources, there's a whole listing of all the no, this is not the one, sorry. It's campus services, my bad. There's a whole listing of all the numbers that are available, and registrar specifically is just an email, because they're not even answering. They're not forwarding phone calls, I guess. So if you need a diploma, I would say get on it early, to ask them what the story is. All right.
Thank you, Professor.
No problem. Other questions about any of this, about registration? Hopefully you know that you should have been able to see your registration opening date on CUNY 1st. That's normally on the right-hand side. If you see that there are any blocks or holds because of advisement or anything like that, on My LaGuardia, you can see who your advisor is. You should contact that person immediately to be able to understand why there's a hold on your account. It could just be that you have to just speak to them and then they'll take the hold off. Please, I know things are up in the air, but don't neglect thinking ahead as much as you can, and even just registering for things now. And if you absolutely have to drop them at a later date, you just drop them before you actually have to pay. All right. So any further questions people can ask me during the break or at the end. So going back into the statement of cash flows, we were busy with Rojas Corporation yesterday and started out, talking about the fact that you have this comparative balance sheet, and then you also have, the net income. We're going to build a full statement of cash flow. So we have the dividends, and then we spoke about the fact that they are telling us that changes in non-current account balances. So remember, current is accounts receivable and accounts payable in this example, but everything else has a direct effect on cash flows. So I'd said to you yesterday, not yesterday, sorry, on Monday, that there are no, this means that there are no non-cash activities, right? So remember, non-cash activities cannot show up in the body of the cash flow. They have to be shown at the end as a separate note. But we don't have to be concerned with that. So any change, like this change in common stock, is definitely because stock was issued for cash, not because of some other non-cash transaction, and so on. The change in accumulated depreciation is basically going to just be the depreciation expense. And depreciation expense is not paid in cash. This is why they say except the change in accumulated depreciation. It's a non-cash expense. Yeah, you can see the movement in 2013, the balance on accumulated depreciation was 10,000. By 2014, it's 15,000, which must mean that we had an extra $5,000 of depreciation expense for the year. And so that journal entry, not that you need to make the journal entry, but just to remind you, that journal entry would have been, debit depreciation expense for 5,000 and credit accumulated depreciation for the same. All right, that's how the balance grows. This is depreciation expense for the year. There were no purchases or sales of the buildings. You see how this number stayed the same. So you can assume that this entire change in accumulated depreciation was just depreciation expense. Land was sold for $4,900 cash, so we know that that's the actual cash that flowed. But we looked back and we said, oh, but how much did this land cost? Because we need to figure out whether there was a gain or a loss. It turns out that the land went from $26,000 to $20,000, which means that the cost of the land was $6,000. Therefore, there was a loss of $1,100. If you had to think about the journal entry for the sale of the land, and I'm doing this because it's going to help you later to figure out how to calculate gains and losses and things of that nature. If you think about this disposal of land, right, the first thing that we can know for sure is that we received cash of $4,900, right? We also know based on our calculations that there's a loss on the sale of $1,100. And no, you don't have to make all these journal entries when you make a statement of cash flows, but I'm trying to show you where the numbers come from. And then easily enough, right, we credit land because the land asset is going down with 6,000. So this cash amount is going to go into investing activities, right? And the loss you are going to deal with in operating activities. Notice that the actual cost of the land itself is not going to show up in the cash flow because we're only concerned with the cash and the gain or the loss. So let me, where did I start doing all this work. Yeah, so on Monday, we got up to here, right? That we had net income. Hopefully, you guys still have the sheet somewhere where you were writing. Net income of 22,630 from the question. The depreciation expense we already discussed now that it's going to be 5,000, right? And that gets added back, and that's because the change in accumulated depreciation is 5,000. What comes next? This was adjustment number 1. What do we normally look for in adjustment number 2?
Gain or loss?
Yeah, so it's going to be the loss on the sale of the land, and a loss is deducted to get to this net income number. So in order to eliminate the impact of the loss, we will add it back, and we are adding it back. I'm repeating myself from the last class, right? We're adding it back because we want to be able to deal with the entire proceeds of the sale in investing activities. And if we leave the loss on the sale of land in operating activities, then we'll be double counting this transaction in some way in the statement of cash flows. So we get rid of the loss that was a previous subtraction to get to this number. When we add it, we basically cancel the impact of the loss. And then adjustment number 3 is going to be analyzing current assets and current liabilities to see whether they have increased or decreased, because the changes in the current assets and current liabilities are not captured in the income statement. All right, it's entirely balance sheet accounts that are involved. So the income statement has all the revenue and all the expenses, but that doesn't necessarily mean that everything was collected and paid in cash. So when we go back to the question, we want to see what are current assets and what are current liabilities. We know that cash is a current asset, but we're not going to account for the change in cash in the operating activity section, because the entire statement of cash flows is concerned with accounting for the change in cash, right? Because remember, the statement of cash flows has to end on this cash number. So we ignore for the adjustments cash, but we do know that accounts receivable is a current asset. Land, buildings, and accumulated depreciation are not current assets. They fall under property, plant, and equipment. And under this section over here for liabilities and stockholders' equity, it's only accounts payable that's a current liability. The others are stockholder equity accounts. So what happened with accounts receivable? Did it go up or down?
It went down.
Right, it's a decrease, right? It's a decrease in accounts receivable of 2,200. So yeah, you want to be careful. You don't just want to think, oh, something decreased, so it must be a subtraction. Think about what's happening. When accounts receivable is decreasing, it actually means that we collected cash from people, right? And if you can't think that through too easily, just remember there's a formula here. A decrease in a current asset you will add back to net income. So we go decrease in accounts receivable, and 2,200 add back. All right, and now we want to look at accounts payable. Accounts payable also went down, right? There's been a decrease in accounts payable, but a decrease in accounts payable basically means that we paid money, right, to decrease our liability. So that means that money flowed out that wasn't accounted for in net income. So I'm guessing that it's going to be a subtraction. So look here, yep, decrease in a current liability, you subtract. And of course, a decrease in current asset and a decrease in current liabilities can't move in the same direction. So it makes sense that even though both are a decrease, one is going to be added and the other one is going to be subtracted. The amount of the change is, oh no, I didn't mean to do that. The amount of the change is $18,730. And so there's this example is fairly simplistic in that there aren't any other current assets and current liabilities. Remember in the previous questions, we saw prepaid expenses, we saw accrued expenses payable, we saw inventory. This company doesn't have any of that. So what does this mean for us when we're doing these questions? Don't just expect that every question is going to look the same. Just like every company is different, every question could be different. However, you should have in your mind kind of the listing, right, of the types of adjustments that you need to take care of, and then the potential accounts that could fall into current assets and current liabilities. Otherwise, you might miss something. So we're done with the adjustments. There's nothing else left to adjust for. And so when we add and subtract as appropriate these items, we see that the answer is negative $10,430. So now remember, this number is being adjusted. So you're going to deduct the 10,430 from 22,630. 12,200, right? So that is what does that number represent? Anybody? Do you remember what the name of this thing is? Starts with net. Nope. Okay. Net cash provided by operating activities. So what we've done is we've said net income on the income statement under the accrual basis was $22,630. But when we actually adjust for all the things that have either non-cash or have other types of impacts, it turns out that the cash that we actually generated from our operations was about $10,000 less than the income. And remember, we said one of the purposes of the statement of cash flows is to show us, that there is definitely a difference between accrual and cash accounting. You could look super profitable in your income statement, but still have no cash to show for it, or vice versa. Remember, Amazon only had not only because it's a lot of money, but they had $10 billion in net income, but then it turns out that their cash was closer to $30 billion. So there could often be a mismatch between the net income in the income statement and the net cash that the company generated. This is part of the value of the cash flow for decision making. So now, for the first time, we're actually going to continue. Up to now, we've just been doing the operating activity section. Now we move on to cash flows from investing activities. So this is the next section. And please, as I said before, these sections have to be done in this order. In fact, you saw even Amazon, a large publicly traded company, is doing each of these sections and is doing it, in the appropriate order as well. When you work in Wiley, you won't be able to just mix things up. It's also expecting you to do it in order. So for investing activities, right, if we have to go back to, and hopefully I haven't been shut out of the textbook here. Okay, if we go back to chapter 17 and we look at that handy little handy little table that they had, we can kind of, I've probably gone too far. Yeah, we can see what goes into every activity. So if we look at investing activities, we know that cash comes in when we sell property, plant, and equipment, if we sell any investments, if we collect any loans that we made to people, and cash goes out when we kind of do the opposites, right? When we purchase PPE, when we purchase investments, when we make loans. So for the purposes of the land, right, we sold property, we sold land. So it's going to be a cash inflow. And the cash inflow is not going to be, 6,000 because that was the cost of the land. It's not going to be the 1,100 loss. It's going to be the actual cash that was received. Okay, so be careful with that. So it's going to be 4,900 that you put in there, because the entire cash amount has to be shown. Does anybody have questions up to here about this number or about anything so far? All right. So again, we eliminate the loss over here so that we can take the entire cash transaction into account. And there was nothing else. I mean, if you look at the question, you can see that there was nothing else that was bought or sold. The land changed. The building's balance did not change. There are no investments. There were no loans. So there's nothing else. So we can, you know, I guess with confidence, move on and say that this is the only cash provided by investing activities. And it's provided by because it's a positive number. If it was a negative number, if we had purchased land, for instance, it would be used by. So I'll just put here used by. Okay, so it's used by, but for now we say provided by. We also said provided by over here because it's positive. I'm pointing this out because again, sometimes first of all, you have to put the right wording in, and it would be like that if you were working in business, but also with Wiley, you have to be so careful sometimes with simple things like this, like you maybe type provided by, but it should have been used by, then it's showing the thing is wrong, and you can't understand why it's wrong. Okay, so that's investing activities. So remember I said that operating activities is basically the most difficult part of this thing. So you can see that things are getting much easier as we move on. And then the last one is cash flows from financing activities. All right. So over here, we have to go back and see what is in there. So we know that dividends is part of financing activities. When dividends are declared and paid, you can kind of guess this already, but I'll just show you. It's going to be an outflow, right? Because you're paying cash for or to your stockholders. Then the other thing that's happening here, you can see there's a $6,000 change in common stock. So there was clearly stock that was issued, and if you think about the journal entry for that, since there's no paid in capital in excess of par, it seems like this was no par common stock. So you would have just said debit cash 6,000 and credit common stock with 6,000 as well. So we need to pick up the 6,000 inflow. If you want to see it over here, the sale of common stock is a cash inflow. So we pick up that stock inflow for the dividend. It would have been debit dividends payable 19,500 and credit cash 19,500 as well. So the credit to cash is out. So this is cash in and this is cash out. And of course, we have to show those amounts as positive and negative as applicable in the cash flow. So I'm going to go back here and do that. So issuance, or you can call it sale of common stock, is the first thing. So we'll do a subtotal here because there's two items. 6,000 positive because that's money coming in. The payment of the dividends is negative 19,500 because that's money going out. And so that's it, because there's no other there's no bond repayment or anything. Does anybody want to guess, wild guess, why we don't take the change in retained earnings? I mean, there's $3,130 increase in retained earnings. Do you want to think about why you may not actually include that as a cash flow? Am I asking all the tough questions today?
Does it mean that it's going back to the pool of money?
Yeah, it's back to the pool, and also this is not cash that is changing hands, right? Because how does this retained earnings flow? I mean, now I'm just
Not
gonna
cash. It
yeah, I'm
doesn't.
just gonna kill everybody now by doing this, but this will remind you of chapter 14, right? The beginning balance of the retained earnings is a 20,000. To that you add the net income, right, of 22,630. So you add, and then it's less. My computer's a little bit slow here. The dividend of 19,500 to get to an ending balance of 23,130. If you check the math, it checks out. So at no point was cash involved other than the dividend, but that is already accounted for, right, in the statement of cash flows, because we already picked up the dividend, and the net income is at the top of the cash flow and adjusted for already. So at no stage ever when you are building a cash flow statement should you be just looking at, oh, there's also a change in retained earnings that I need to put in the cash flow, because if you're picking up the dividend already and you picked up the net income and adjusted it for all the adjustments to get to net cash, then that's all already baked into the change in retained earnings. All right. So I've had sometimes people struggling with this when they're building a cash flow, thinking that they have to also somehow account for the change in retained earnings in the cash flow. You don't have to. Any questions on that, or are we good? Assuming silence is golden. All right. So we're done with financing activities. If you look at, this amount, it's going to be negative 13,500 because the dividend is much bigger than the amount that you got from issuance of common stock. So that will be changed now to net cash used. You don't have to capitalize. I'm just doing it so you can see the difference. Net cash used by, right, financing activities. Everything else is provided by, this is used by financing. I guess I don't need to put the subtotal there. I'll just put it. No, this wasn't a good move. Sorry, this is me being somewhat annoying doing all this stuff. All right, so net cash used by financing activities. All right, 13,500. Now the question is, what happens next? Right, what does this all mean? So if you look at these three numbers, the cash provided by operating activities, the cash provided by investing activities, and the cash used by financing activities, these are the explanations for the changes in cash during the year, right? Going back to the question, you see here that between 2013 and 2014, there was an increase in cash of $3,600, right? So obviously, we can see that cash went up by $3,600, but if you wanted to know in which areas, was cash generated or used, these three numbers give you the answer to the 3,600. So the next step is to say that there was a net increase in cash during the year, and we could know that even just by looking at the balance sheet. And so the increase in cash is coming from the operating activities, plus the investing activities minus the financing activities is 3,600. And I'll just put in brackets here so you can also see this is the same as the cash from 2014 minus the cash from 2013. So what's the cash flow statement is a tough topic, but what's nice about it though is that you can actually check your work, because once you lay out all the changes in the various activities, whatever cash change you come to at the end here should be the difference between the two cash numbers on the balance sheet for the current year and the prior year. So that's your check total to see if you got the numbers correct. And then to that, you add the cash at the beginning of the year. What's going on with my typing today? 10,700. That's right, that's the 2013 ending cash number, is the 2014 beginning cash number, which then brings you to cash at the end of the year. That's at the end of 2014. So here you are doing these two together to get you to 14,300. So these three numbers, that's a horrible color. These three numbers belong with each other, and these three give you the 3,600. Questions on any part of this cash flow? Okay, so people are either away from their desk or asleep or actually following. I hope it's the latter. So that's a full cash flow with the information provided. I want to turn our attention to just a quick example of something to do with asset disposal here, example number 5. And the way the rest of the class will go is that other than just learning the formula for calculating free cash flow, which is very basic, the rest of the class we're just going to practice cash flow statements. Once you have the theory, which we've done now, the only way to master this thing is to just keep doing it. So if you'll be so kind as to turn your attention with me to example 5, I want to just discuss a part of the cash flow that sometimes gives a little bit of trouble because people have to remember the accounting around disposals of assets. And this is to do with what we kind of did here in a very simple way. Remember when we're talking about the land that was sold? That's a disposal, but the difference is land doesn't have accumulated depreciation. So I wanted to just look at an example that also has accumulated depreciation. So I'll walk this through with you, and hopefully it will provide useful I guess, tools for solving this kind of problem moving forward. Your printed page is in a better format than this thing, because this year the zeros are a little bit messed up. So hopefully everybody has access to the printed page as well. Let me see if I can fix this. Yeah. Okay, so this is a little bit better to read. So basically it says the T accounts for equipment and the related accumulated depreciation on that equipment for Luo Company at the end of 2014 are shown here. So let's just go through this and see if everybody can kind of make sense of what's happening here. Sorry, I'm finding it hard to read this thing that is so poorly formatted. Okay. So if we start with the equipment, right? The beginning balance is 80,000. So if this is for 2014, then this would have just been the balance at the end of the year. 2013 becomes the beginning balance in 2014. So at the start of the year, the company had $80,000 in equipment. They have an ending balance of 99,600. So it obviously looks like, if you just had to look at the beginning balance and the ending balance, it looks like the company purchased 19,600 worth of equipment during the year. Okay, if you simply just looked at the change in the balance from the beginning of the year to the end of the year, but that is that could be deceptive, as you can see, because what happened was not just a purchase of 19,600. What actually happened was that the company bought equipment for 41,600 and sold equipment for 22,000. So there are going to be examples of statements of cash flow where you actually have purchases and sales in the same example related to a particular asset. I often recommend to my students, when that's happening, to work on drawing up a T account or some type of ledger account so that you can visually see how the balance has changed, right, over the course of the year. Otherwise, you may miss out on something. So that's the disposal, meaning equipment with a cost of 22,000 was sold, and equipment with a cost of 41,600 was purchased. Now, the accumulated depreciation on the equipment, if you looked just at the beginning balance and the ending balance, it's kind of like a similar notion, right? Because you're saying, okay, the balance went from 44,500 to 51,000. So it must be that 6,500 is the depreciation expense for the year. If you just consider these two. Sorry, someone saying something? Okay. Oh, you're talking to someone else. Okay. So 6,500 is the change. So if you looked at just at the balance sheet, you think, oh, well, that means depreciation expense for the year is 6,500, right? Looking at these two numbers. But again, that is deceptive because there was something that was sold during the year. And remember, accumulated depreciation increases on the credit side and decreases on the debit side. So the depreciation expense for the year is going to increase the balance. Any sales will be a debit and decrease the balance. So in fact, it turns out that the depreciation expense for this company is actually $12,000, not the 6,500 that we thought, because they had disposed of an asset of 5,500. So there are examples of cash flows, and I'll do one with you today, where it looks like you could easily just look at the change in accumulated depreciation and get your answer for depreciation expense. But as soon as there's a sale, you have to be careful. So just to think back to this number 3, Rojas, right? The reason we could say depreciation expense was 5,000 was because there was no disposal of buildings during the year. So this change really did represent the actual depreciation expense. All right, and again, this is a part of the work that people often battle with a little bit, so that's why I'm going over it in such depth. And I'll show you T accounts and so on when we have to do examples that might involve purchases and sales of assets within the statement of cash flows. So any questions on this piece before I actually get to what this question is asking for? All right, let me see if anyone's chatting to me. Okay. So in addition, Luo Company's income statement reported a loss on the disposal of the equipment. So when they're speaking specifically about this disposal, that there was a loss on the disposal of equipment, what amount was reported on the statement of cash flows as the cash from the sale of the equipment? That's the question, right? Remember when we were doing the cash flow, I'll just go back here. This example also had a loss, right? But the loss was 1100, which was completely different from the cash that actually flowed in that transaction. So here's the cost of the equipment that was sold. Here's the accumulated depreciation. You are given the loss amount. So I'm going to give you, let's say, 5 minutes until 11:27. Don't say anything. Don't scream out anything. Just think about it to see if you can calculate what the cash amount is that this company received. All right. So 5 minutes, and then I'll take answers. Calculate the cash from the sale of equipment. Okay, 2 more minutes. Yeah, people joining. So what we're doing is trying to calculate what is the cash that the company received on the sale of equipment given the information provided. All right. We're back. Any takers? Throw out dollar amounts and let's see if you're close to the right amount. How much cash did the company receive from the sale? So if you don't know, sorry, if you don't know, maybe a good thing to do is to write out the journal entry and see if you can solve it that way. We know that the cost of the equipment that was sold is 22,000. So that would be a credit to equipment. We know based on what was said in the question that the loss on sale is 5,500. We know that the depreciation coincidentally is also 5,500. So we want to know how much the cash is that the company would have received. So for those who did not get to an answer or who have no idea what to do, maybe now you can calculate what the answer should be. Try and calculate it. Another way of thinking about this is you have a loss when the cash received is less than the book value of the asset, and book value is equal to cost minus accumulated depreciation. So the loss is 1100. Sorry, what am I saying? 11. That's from the previous example. The loss is 5,500. The cash, we don't know how much it is, right? But we can calculate the book value. The book value is going to be 22,000 minus 5,500, right? And how much is that?
$16,500.
Thank you. So if I have a loss of 5,500 and my book value was 16,500, it must mean that the cash I received was only 11,000. Similarly, to balance this journal entry, the cash that you received was likely only 11,000. Okay, so a loss implies that the cash has to be less than the book value. Questions there? Or can I repeat the whole thing to solidify it in your minds?
Fine. Thank you, Professor.
Okay. Anybody else need, let me see in the chat if anybody's asking me anything. No, it's very quiet today. Okay, so why do we care, right? You should be saying, why are we doing this? Who cares? So what, who cares? In the cash flow, you're going to need the $11,000 number for investing activities. So some of these questions could present themselves in a way where they don't tell you how much cash was received and you have to calculate it, or they don't tell you what the loss was and they'll tell you what the cash was, but you have to calculate the gain or the loss, and you need that for operating activities. So this is why I'm saying you have to be very careful here with knowing how to basically sometimes work backwards or solve for numbers, because all the numbers are not given. Like I said in example number 3, I guess it was a little bit more obvious because there's no accumulated depreciation on land. So they told us the cash, but we had to calculate the loss, but it wasn't as hard because we didn't have to deal with accumulated depreciation. Yeah, we did. And I find that more often than not, your best bet is to actually recreate the disposal journal entry and solve for the cash number. Because sometimes people don't remember how to calculate book value and so on. So that's I guess a way to work through questions that don't give you enough information to complete all parts of the cash flow. The next, so let's do this just to kind of close out operating activities, although this one, does give you the loss. Let's close out operating activities with you guys doing this Zambrun company example. Then I'm going to do 2 more full cash flow examples with you, some of which have this thing where we have to calculate either the loss or the cash that is received. So for now, I'm gonna say let's take 15 minutes to do Zambrun, but I'm just going to take 2 minutes to read it through with you, and then you guys will do operating activities. So might as well start there. Prepare the operating activities section of the statement of cash flows using the indirect method. So it's basically the exact same thing that we've been doing all along. You start with net income, you make the adjustments. The adjustments are 3 adjustments: adding back depreciation, adding back a loss or deducting a gain, and then adding or subtracting the changes in the current assets and current liabilities that are non-cash. And they actually give you a check total, meaning your net cash from operating, provided by operating activities, should be 318,000. Let's go to the top here. Zambrun Company's income statement contained the condensed information below. So I'm just pointing out, right now in this example, they give you an income statement, but they don't give you a balance sheet. In other examples, they gave you a balance sheet, but no income statement. You almost have to be prepared for the information to be presented in any way that you can imagine. The point is not to want the information to be presented a specific way. The point is to know which parts of that information you need to build your cash flow, okay? So we get given this income statement and you see things like service revenue, operating expenses. So this can start becoming confusing because you're like, wait, am I supposed to be putting this stuff into the cash flow? And then you have to think back to what is the process of building this thing. You start with net income, right? So your first thing that you're looking for is what is the net income number. Then you start looking for the adjustments. The first adjustment that you need to make is depreciation expense. And there the number is, I mean, it's gifted to you, right? You don't even have to calculate it. The number is given to you at 60,000. Then you're thinking about gains and losses. Yeah, the loss is actually given to you already pre-calculated, so you just need to know whether to add or subtract it. Income before income taxes, income tax expense. You don't need to do anything with that because you're already starting from net income, all right? So just in this income statement alone, you have the net income that you need, you have the depreciation expense, and you have the loss on disposal of equipment. So the only other thing you need to look for is the third set of adjustments, which is the changes in current assets and current liabilities. And they actually give you this information as well. There's accounts receivable. You can see that the balance went up. Accounts payable, the balance went up as well. And then income taxes payable is also a current liability because the IRS is not going to wait for more than 1 year for you to pay your income taxes. So that balance went up as well. And so you will have to calculate the changes here and know whether you have to add or subtract those changes. And then they're just telling you accounts payable relates to operating expenses so that you can know that you can take the entire change in the balance into account when you do the adjustment. Okay, so let's say 15 minutes for you guys to prepare an operating activities section of the statement of cash flows, and the number that you should end on is 318,000. Questions on anything, or you're good to go? Let me just check here. All right, so there's seemingly silence, so you guys can get on with it. I'll be away from the desk here for like 2 minutes, and then I'll come back. All right, so that was the time. Let me bring up the solution. I believe I have it on here. Just 1 second. Yeah. All right. So I'll toggle between the question and the solution. So like we said, net income is 230,000. So you should have had that. The depreciation expense was given, the loss was given. The loss is always added back because it was previously subtracted to arrive at net income. And then if you look at the bottom here, we had a $10,000 increase in accounts receivable. That means that the company did not collect that money. So even though they recorded the revenue, there's actually 10,000 of that revenue that wasn't collected in cash. So we deduct that from net income to show that that amount was not actually collected in cash. All right. Then when we look at accounts payable, we see that there's a $18,000 increase in accounts payable, which means that there are expenses here that were not actually paid in cash because they're still owed. So as a result, the net income number is too low by 18,000, right? Because that cash wasn't actually, those operating expenses were not actually paid for in cash. So we add that back. Remember, if these logical explanations are still not making sense to you, you just follow the rules, right? That an increase in a current liability you add. And then for income taxes payable, there was a $4,000 increase, which means we kept money in our pocket. Of this income tax expense of 40,000, 4,000 actually was not paid in cash. So your net income number is too low. So you got to add it back in. So all these numbers together come to an adjustment of 88,000 positive. Add that 88,000 to the 230,000, and you come out to a net cash provided by operating activities of 318,000. Questions, anybody? Anything I can repeat for you also?
Do we have to put the tax payable?
Are you asking if this income tax payable number has to go in?
No, because I just put it to the account payable as 22,000.
No, it needs to be shown as its own separate thing. If it's a separate ledger account, which it must be because it's being shown separately in the balance sheet, then it has to be shown as a separate line item for sure. All right.
Thank you.
Other questions? Okay, so let's take a 10-minute break here as always. And then when we come back, I'm going to do in the textbook, although I did pull it up here, problem 17.11a with you, Roethlisberger, and we'll see how far we get on that. So be back at 12:05. If there are people who have questions, I'm still here. You can ask me anything during the break. All right, I'm just going to pause the recording. We're back. I didn't have any questions during the break, so hopefully that means that everybody's okay. Let me just actually make sure that I have all of your attendance before we do, before we do the question. All right, so we're going to do problem 17.11a. You can either look in Wiley, or if you don't want to do that, you can, I did put the question here on the Zoom call materials. Maybe you just pull it down, or you can follow along with me. But I do think it's probably better if you actually just pull the question down for yourself, so that you can still be able to see it as I go through answering it as well. So, oh gosh, what did I just do now? So this is a bigger cash flow. As you can see, there's a lot going on here, and I thought that it would be good to work it through with you, just to show the extent to which this whole thing can go. So, you know, I don't want to give the impression by the smaller class examples that we did that that's kind of like the hardest that it could get. There is more sophistication. So the instruction is usually exactly the same. Prepare a statement of cash flows, right, for the year ended December 31, 2020, using the indirect method. They do give you a check total year for cash from operating activities of 113,000. So that means that at least when you are finished with the operating activities section, you should be able to know that you're on the right track, because you need to have 113,000 as your net cash provided by operating activities. All right, so if we go back up here, you can see that they give us a comparative balance sheet 2019, 2020. Remember that you already know from what we've been discussing that your statement of cash flows should end right on 81,000. That's your final balance. And if you do end on 81,000, then you know you're okay. Also, obviously with Wiley, you can easily see if things are green or red, but if you don't submit yet and you just work the thing through and get to 81,000, you should be fine. Also, you should be able to see that the difference between these two numbers is 36,000, which means your net increase in cash for the year from operating, investing, and financing activities comes out to 36,000. Other things to consider as you look at the balance sheet, remember that we also look at the changes in current assets and current liabilities. Here are your, I keep doing things that are not working out. Here are your three current assets, right? So later on, we'll look at whether they're increasing or decreasing. The company also has land. There seems to be a change in the land. There's buildings. There's no change in the buildings. And then there's depreciation. There's also equipment. There's definitely movement in the equipment number, and then the depreciation on the equipment. So there are a lot of like property, plant, and equipment type assets that this company has. And then looking at liabilities and stockholders' equity, the only current liability is accounts payable. Bonds payable is not a current liability. It's going to be part of your financing activities. So you can see there's a change of 40,000 in bonds payable. There's also another change of 40,000. 40,000 in common stock. So you want to be careful here, because it might be that bonds were converted to stock or something, which means that it won't be a cash transaction. Remember, we said that any change in retained earnings we don't have to record as a cash flow, because normally it's got to do with dividends, and it's got to do with net income that are already included elsewhere in the statement of cash flows. Questions on the balance sheet or anything else up to this point? All right. So now we come to what's usually referred to as additional information, which you absolutely have to read before you even start the cash flow, because a lot of the times the additional information is either giving you information that wasn't presented anywhere else, or it's giving you additional explanations of numbers that are presented in the balance sheet or income statement. So it tells you that operating expenses include depreciation expense of 42,000. So the question is giving you the depreciation expense for the year. You do not have to go up and try to calculate depreciation expense for the year. In fact, if you calculated it this way, you would look at, oh, this is 20,000, oh, this is 10,000, so it must be that depreciation expense is 30,000, but the reality is that it's not, it's 42,000, and that's probably because something was sold during the year. So depreciation expense of 42,000, you will have to add back, right, to net income. Charges from prepaid expenses of 5720. That's great, but we actually care less about that and would rather be looking at this change, and it's probably the same amount, dollar amount, but we'll just work it through systematically. Land was sold for cash at book value. If something is sold at book value, so sold at book value means book value equals cost. So no gain or loss. All right. So that helps, because then we know when we're completing the operating activities section, we don't have to be concerned about finding a gain or a loss related to the sale of land. Cash dividends of 20,000 were paid. We know that that's going to go into financing activities, right? Net income, okay, so yeah, this is the number that we need to even start the whole thing, right? Net income was 42,000, so that's going to go into operating activities. So yeah, this one, this number 5 could potentially be giving some trouble, because there's a lot going on here. So let's read it. Equipment was purchased for 88,000 cash. So this purchase of 88,000 cash is going to be an outflow in investing activities, right? Because when you buy the equipment, you debit equipment and you credit cash, so cash is going down. So we already know how to treat that. That's going to be a minus 88,000 in investing activities. In addition, equipment costing 22,000 with a book value of 10,000 was sold for 6,000 cash. So now the question is, was there a gain or a loss? So I'm going to give you, let's say 3 minutes here. Don't say anything. Just think about it for 3 minutes. Try and do some calculations to see if you can come up with a gain or a loss for the sale of the equipment. You would be following the same approach that we were doing earlier when I showed you how to calculate a gain or a loss on the disposal of an asset. Okay, so take until 12:16 to calculate whether there was a gain or a loss on the sale of the equipment. All right. Any takers on whether there was a gain or a loss? Nothing? Oh boy. Okay.
It's
So
a
yeah,
loss.
yeah, go ahead. You saying something?
There's a loss.
Yeah, there's a loss of how much?
4,000.
That's right. So the rules are if the cash received is less than book value, that and book value is cost minus accumulated depreciation. What's going on here? Okay. Sorry. Book value is cost minus accumulated depreciation. That equals a loss. All right. And obviously, if the cash received is greater than book value, that equals a gain. So in this case, the cash is 6,000, the book value is 10,000, right? So cash is 6K, book value is 10K, so that equals minus 4,000 loss, right? So we're going to have to deal with a loss in the operating activities section, and then the 6,000 cash will go into investing, the loss goes into operating. The bonds were converted at face value by issuing 40,000 shares of $1 par value common stock. This is clearly a non-cash, and in this case, it's a non-cash financing activity, and that we will show at the bottom of the cash flow. Okay, it's not going to go into the cash flow itself because non-cash items, I mean, by definition, don't belong in the cash flow statement. So when you're tackling these questions, often it helps to just do a lot of the kind of the legwork even before you start doing the cash flow itself, because it helps you not to, you start and then you realize that you're trying to calculate things that were already given, and there are other things that you need to calculate that you forgot about. So going through the additional information first at least gives you a feel for the types of transactions that you're going to be expected to record. So I'm just going to find, let's start with a new sheet. And so this is again P17.11a, and remember, if you don't have access to it through Wiley now, it's on the Zoom call materials. So Roethlisberger is the name of the company. Statement of cash flows for the year ended December 31, 2020. Remember, it's always for a period of time. And then you've got these headings. As I said before, when you are doing the homework, sit with something next to you that reminds you of the format, so you don't have to keep trying to figure it out. Because if we were together in person, I would have given you a template, all right? You don't have to memorize every line item. You just need to know how to get to the correct amounts. So as usual, we start with net income. And if you go back to, where am I now? If you go back to the question, you know that net income was given in the additional information at $42,000. And then you've got this long, tell me to slow down if I'm going too fast, okay? You've got this long thing that says adjustments to reconcile net income to net cash from operating activities. And again, you don't have to memorize this, you just need to understand that the items that are coming after this are all adjusting this number. All right. So, and again, this adjustment number one thing, you wouldn't write on Wiley, but I'm doing it to kind of drill us to remember that there are three different adjustments and that we need to account for all of them. So when we start, we know that the first adjustment that we look at is depreciation expense. That number was given in additional information. If you had tried to calculate it using these accumulated depreciation numbers, you would have come out to a different total, and that is because we sold equipment that had depreciation of $12,000. So watch out. Don't just assume that you can take the depreciation expense as being the change in accumulated depreciation for the year. So the question tells us that depreciation expense, excuse me, is 42,000. The second adjustment that we're looking for is any gains and losses. And we know from our little calculation at the bottom here that there was a $4,000 loss on the sale of this equipment. So we can go in there and say loss on sale of equipment, and we recall that the rules tell us that a loss is going to be added back because that same loss was previously deducted from net income. So now it gets added back onto net income in order to make the impact zero. Now we come to adjustment number three. It's going to be to do with the changes in the current assets and the current liabilities, right? So going back to the question, you have to go up and calculate all the adjustments. So I'm going to give you, let's see how many there are. That's going to be 4 of them. So I'll give you 2 minutes here to calculate changes in the current assets and current liabilities, as either increases or decreases. And then you guys can tell me what you came up with. All right, so someone tell us what you think is the change in accounts receivable, increase or decrease, and how much?
Increase.
Sorry, you said decrease? What's the amount? What do we have? 21,000, right? So a decrease in accounts receivable is meaning that we are collecting money from our customers, but those collections have not been included in net income. So we have to increase the net income amount by the amount of accounts receivable that was collected, because this would not have been included in the revenue balance. How about inventory? Up or down? I guess I'll just move us along because I don't have much time to wait. Increase in inventory. So inventory went up by 9,450. Um, excuse me. And if inventory went up, it means that we had more stock left over at the end of the year that we had paid for in cash, but it wasn't yet sold, so it's not part of cost of goods sold, which means it was never deducted from the net income number. So this cash paid for that extra inventory that is sitting on our shelves at the end of the year has not been accounted for. This is, it's a little bit of a difficult concept, but the cash paid for the extra ending inventory has not been accounted for in net income, because net income only includes the impact of cost of goods sold, so stuff that was actually sold. So we have to decrease the net income number for that inventory increase. If you cannot understand that yet, that's okay. Just remember that an increase in a current asset is a subtraction. Okay, that you can use the rules to help you. Then we've got prepaid expenses. Prepaid expenses went down, which means expenses ended up in the income statement that weren't actually paid for in cash. So a decrease in prepaid expenses, just like a decrease in accounts receivable, is also going to be added. And this 5720 that you see over here is the same 5720 that they were talking about in the question in number 1, where they said charges from prepaid expenses of 5720. So those numbers, oops, what just happened? Those numbers check out. Okay, so that's prepaid expenses. And the last one, I'll just do also quickly because, again, I'm watching the time. I don't want us to run out of time. The last one is accounts payable. Accounts payable went up. So an increase in accounts payable means we kept money in our pocket. We did not actually pay for all the expenses that were deducted in the income statement. So that means that we have to add this back, because net income includes expenses that were subtracted but were not actually paid for in cash. Again, if you can't remember how to think that through yet, the rules tell us that an increase in a current liability has to be added as the adjustment. And those are all our adjustments, right? Adding back depreciation or amortization expense, we adjusted for the loss. If there had been a gain, we would have deducted it. Then we've got all the current assets and current liabilities. Any questions on those adjustments before I move on here? All right, so the result is 71,000 positive. And remember, this number adjusts this number, so you're going to add them together, 113,000, and that is going to be the net cash provided by operating activities. And this is the same as the check total that you were given over here, right? 113,000 is your check total. So you should be good to go. So then the next, you don't need a dollar sign here. So before someone asks me, I'll just get rid of it. Okay. So the next thing to tackle is the cash flows from investing activities. Okay, that's the heading. Remember, we've got a few things going on in investing activities. If we go back to the question, we know that there was a sale of land for book value. So that means that the amount of cash that we received is the same as the book value. The book value of the land is just cost because land is not depreciated. So what dollar amount of land was sold? What do you see here? What's the difference between 2019 and 2020? What's the dollar amount of land that was sold? Anybody?
I need 25.
Yeah, 25,000, right? It went down by 25,000. So because it says that land was sold at book value, it then also means that the cash amount is the same as the book value. Again, for land, book value is just cost because there's no accumulated depreciation. So it means that we received cash of 25,000. So when I go into my cash flow, I'm going to say sale of land, and I'm just going to put 25,000 because the cash and the book value are the same. And then we also had, if we scroll a bit more, we know that we sold equipment and it was sold for $6,000 cash. Remember, in investing activities, you're just focusing on the cash that was received. You've already dealt with the loss elsewhere, so you don't have to go back and start doing all the calculations again. You definitely don't put the cost in as the amount that was received. You're looking for whatever cash was received. In this case, it's $6,000. So the sale of equipment brings in $6,000, so it's positive, right? And then there's one more thing that we did. Sorry, wrong thing. One more thing was 88,000 purchase of equipment. That's going to be an outflow. That's going to be a subtraction in your investing activities, because when you buy something, obviously you're going to have less cash on hand. So purchase of equipment minus 88,000, right? And these signs are important because, especially read the, when you're doing the homework, make sure that you read to see what they say you have to do with the signs, because you can get confused if you don't put negatives and positives as appropriate. You might add things that you're supposed to subtract and so on. That's the end of investing activities, because we did equipment, we did land, we don't have any buildings, we don't have any investments or any loans that we have to deal with. So that's all there is for investing activities. When I sum these amounts, it comes out to minus 57,000, right? So in this case, remember, when it's a negative number, you say that it's net cash used by. So this is going to be net cash used by investing activities of negative 57,000. Questions up to there? All right, and then the last section of activities is cash flows from financing activities. And for this, you're going to go back to the question and see what's going on. Remember, financing has to do with stocks, with the bonds. We ignore the retained earnings because we don't have to look for cash movements there. But the stock and the bond change, per our previous discussion, is a non-cash activity, right? Because we converted bonds into stock. So that's not going to go into the financing activity section of the cash flow. However, this dividend that we saw from before is definitely part of financing. And the payment of a dividend is going to be cash outflow, right? A minus. So it's going to be minus 20,000, and that's going to be the only number that we have for financing activities. I can't remember what the textbook does or what Wiley does. I'll just put net cash used by financing activities, but I'm not sure if they expect you to do a total when there's only one number, but I'll do it anyway just for the sake of completeness, right? So that's net cash used by financing activities. So now we've managed to calculate all of our activities. If you recall, I said you can kind of predict what the sum of all those activities should be. The change in cash for the year is 36,000. So when I look at these three things together, they should sum to 36,000 positive, and that is in fact the case. So again, I'm going through and actually checking my work. And so what you call that is the net increase in cash during the year, or just the net increase in cash is also okay. And you're going to take the 113 from operating activities, the minus 57 from investing, and the minus 20 from financing, and come out to 36,000, right? Which is the same as the, excuse me, the 81,000 that you end up with minus 45,000 that you started with. And then to that, you add the cash at the beginning of the year, or sometimes they call it the beginning of the period, and that's going to be your 45,000, right? You're pulling it straight off of the balance sheet of a year. You don't have to think much about that to get you to the cash at the end of the period, which we know already from our balance sheet is supposed to come out to 81,000. And so that's the proof that your calculations are correct. Questions on any part of the cash flow before I do the non-cash piece? All right. So the non-cash, which is the conversion of the bonds to stock, you would just put a section at the end of the cash flow. Non-cash investing and financing activities, they normally do as the heading, and then you can just say conversion of bonds to common stock, and you put the amount of $40,000, so that someone looking at the cash flow and looking at the balance sheet won't be confused saying, wait, hang on, there was a change in your bond balance, there was a change in your common stock balance, but somehow those things are not being accounted for in financing activities. They'll be able to see, oh, it's because the bonds were converted to stock, which means that cash wasn't involved at all. So that's the example. That's, like I said, that's one of the bigger examples that we have. So, I thought that it might be a good use of our time for me to work something like this through with you, because I guess I'm trying to show you all the various possibilities of how the information can be presented. Any final questions here or remarks? Okay, so I guess, to me, the silence is people still need to process this. You probably are knee deep in doing the chapter 15 homework, some of you, and you haven't really even thought about cash flows as much. So I anticipate that, as we roll around in next week, that people might have more questions. Obviously, you can rewatch this video. All the videos up to Monday are up on the YouTube channel. You can rewatch this explanation. I also just wanted to remind you, I don't know if I said this before, I honestly can't remember, but if you go to videos on Blackboard, exercise 17-8, which is one of your homeworks for chapter 17. Some time back, I worked through that example on a video, and there's two links here, part 1 and 2, where you can actually watch me working through that example also, just in case you want some additional support. Someone's looking for me. Are we continuing chapter 17 next week? To some extent, I have one more thing to tell you, and then we're basically done with chapter 17. However, next week, Monday, I'll start by at least doing one more cash flow. And if people want more, I can do more, because after this, we really only have chapter 18 left, and we do still have a few meetings. We probably have about 3 or so meetings where we can do chapter chapter 18. So I'm happy to continue with the practice. I can't gauge. It's so difficult, with the online teaching. In class, I could gauge because I can see what people are doing in their books. So I can't gauge how much people are struggling with this. So I'm happy if people have had some time to process. Happy to revisit some parts of this because, like I said, I anticipate that there's still going to be some questions. All right. So why don't we agree that next week we'll continue. One thing I just want to point out, there's a teeny tiny topic in the chapter that sometimes comes up as a part B on some of the questions. There is a concept called free cash flow. I didn't even include it in the notes. You can find it in the chapter. So basically all this is when we build the statement of cash flows, obviously we're seeing how much cash the company has on hand at the end of the year, but sometimes people just also want to know how much cash is the company generating from operations minus any cash that they plan to spend on what we call capital expenditures, which is purchasing, like new property, plant, and equipment, minus any dividends that they're going to have to pay out to investors, which then kind of results in what you would call free cash that is available for the company to use in different ways. And this is often, I guess, something that is, how can I put it, that is a concern maybe of someone who wants to buy the company, to say, okay, I can see how much money you're making from your day-to-day activities, but then how much do you have to spend, to either expand or sustain those activities, and how much are you still going to pay to people outside, so that I can know how much cash would actually stay behind in the company. So that's what free cash flow is. We can talk about it a little bit more, and I'll do an example next time, but I wanted to point this out in case someone is busy with chapter 17 homework. I think there are one or two places where you just have to use this formula basically to calculate free cash flow. And I'll make sure that we do a proper example next time. But that's it for now. I don't have anything else unless anyone has a question for me. You are free to go and enjoy your day. I do have all the attendance, just making sure that I checked off everybody. So yeah, so you guys are in good shape to go. And like I said, I'll try and do a little bit extra chapter 17 on Monday, and then we'll go into 18, and then for the rest of the meetings that we have, it will just be reviewing in preparation for the final.
Can we on Monday do a review on 15 and 17 together? Like a quick review, examples for everything.
What will happen on Monday is, and thank you for reminding me of that, actually, on Monday I'll go over the chapter 15 homework in detail because it would have already been due on Friday. So I'll go over the chapter 15 homework in detail. Then I will tackle anything that's still left over for chapter 17. My intention is to go over the chapter 17 homework after it's due on the 26th, which might mean that some people, have questions before that because they want to finish the test before that. That's okay. You can contact me via email. But my practice is definitely to only go over the homework solutions after it's due. So definitely 15 on Monday, but 17 I'll hold off a bit because I just want people to grapple with the material a bit longer. Okay?
Thank you.
Okie dokie.
Have a great week. Take care.
Thanks, you too. Bye.
Thank you, Professor. Take care.
You're welcome. Cheers.
Thank you, Professor. Take care.
Okay, you too. Bye-bye.
Thank you, Professor. Take care.
You're welcome.
Bye.
Bye.